Hi everyone, so today I'm going to go through with you exercise 10.14 of grade 12 inventory systems. I just think this is quite a basic one with all the things that you could find when asked. I mean, it's only a level 2 question, so it's not your hardest question, but it'll give you a good understanding of how to use both methods. Okay, so the required asks us to calculate the following using the FIFO method. So it's asking us to calculate the value of stock, the cost of sales, the gross profit, and the actual markup achieved. Remember, FIFO is whatever has come into our company first, it's leaving our company first, okay? So when we sell goods, it'll be the opening stock units will be sold first, and so on and so on. Okay, so the value of closing stock, you can see that closing stock units had 19 units on hand at the end of it. So that means we're going to take the 15 units that was last purchased and the remaining from the previous purchase before the 15. So that means we're going to take 15 units at 221 Rand and then 4 units at 231 Rand, okay? So if we look at it in the calculation, you're going to see that there's going to be 15 units at 221 Rand, which gives you 3,315 Rand. And then you're going to have 4 units at 231 Rand, which is equal to 924. This gives you a total value of closing stock at 4,239 Rand. Okay, so secondly, it's asking us to calculate the cost of sales. So remember, the cost of sales is your opening stock plus your purchases minus your closing stock, okay? Remember, cost of sales is always at a Rand value. Okay, so what you would do is you would take your 5040, which would be your opening stock, plus your purchases, minus your closing stock, which is this figure that you just previously calculated. So your 5040 was your opening stock, the 35,713 is your purchases for the year, and your closing stock is 4,239, which you previously calculated there. Gives you a total cost of sales of 36,514. Okay. So thirdly, now it is asking us to calculate the gross profit. And we all know that the gross profit is your sales minus cost of sales figure. So your gross profit is going to be your sales figure of 46,080, which was provided to us here, minus the 36,514, which was previously calculated there. Okay, you can see that it's a drop down effect of calculations, which means that if in a test you get this figure wrong, you would get a method mark for using it and following through with it. Okay, so your gross profit results in 9,566 Rand. You can see that's not considerably high if you were to look at it, because if you can see your sales figure is 46,000, and now you're only achieving a 9,500 Rand profit from the 46,000. Okay, so bear that in mind. D asks us to calculate the actual markup percentage achieved. Okay, so markup percentage is going to be your gross profit over your cost of sales. So it's going to be your 9566, which was calculated here. You're going to move it and use it there. And you're going to use your 36,514, which is your cost of sales figure. And you put it down to the bottom, and then you times it by 100 to get a percentage, and you get a total actual markup achieved of 26.2%. Now in reality, that is not high at all. You really want to achieve a markup greater than 50% in reality, so that is not a good markup achieved. Okay, so now for question 10.14.2. The owner is of the opinion that the business would have shown a greater profit if they had used the weighted average method. Do you agree? And show your calculations to answer this question. Okay, so remember, with the weighted average method, we've got to take the total value of all our purchased goods divided by the total goods we've purchased to give an average of what 1 unit would actually cost us. Okay, so for this particular question, 14.2, we got to do a 3-step process. So they're asking us what the weighted average method would be, and with that we got to calculate the profit from that. Okay, so for this question you got to calculate the total cost that it cost you to purchase all those goods. So it'll be your opening stock plus your purchases, which gives you 4753, divided by your total number of units purchased. Okay, so that would be your 24 plus your 159, so your opening stock plus your purchases again. Okay, divide the 4753 by the 183 units and you get 226.69 Rand per unit. Okay, once you have that, that's now your average cost per unit. So now you use that cost for every unit. So your value of your final stock, which is essentially your closing stock amount, is going to be the 19 units that we have on hand that you can see here, times by the average Rand per unit, which is the 222.69 Rand that was here. Bring it down there, which gives you a final calculation of 4,231 Rand as your closing stock. Okay, now they ask you to compare the profit. So now you got to calculate this profit to determine if it was better to use the weighted average method or not. So profit is going to be your sales minus your opening stock plus purchases minus your closing stock. So your sales was 46,080 minus your, in brackets, opening stock, which is 5040, plus your purchases, which is 35,713, minus your closing stock, which you have just calculated here. So that figure there is what you have just calculated here. So that will give you a total of cost of sales of 36,522, and it gives you a total profit of 9,558. If we compare this figure to our previous gross profit already calculated, you can see there's not huge difference, which means that it's an insignificant change. I mean, the change is 8 Rand, and in reality 8 Rand can buy you a pencil, so it is not a huge change. So you can justify it by saying it's insignificant, because it's not a huge change. If you were to critique this further, you could see that there wasn't a huge change in prices, in unit prices. So it could have been okay for them to use a weighted average because there wasn't a significant change in the unit prices. Okay, so if we were to look at the next question, which is your number of bags stolen. So your number of bags stolen, you're going to need to take what the units actually purchased. So it is now the opening stock, and the purchases is your actual stock that you have had in the shop, minus what you sold. That would give you the right figure that you should have on hand. Okay, if there's a difference in the two amounts that you calculate between what they've told us the closing stock is, so that was a physical stock taken, and they told us there's only 19 units, then we know that there's theft happen, or there's something damage to the goods maybe, but usually it's stolen or theft. So we're going to take, for this calculation, we're going to take the 183, which is your opening stock plus your purchases, minus your sold units, which is now the 144, gives you your actual stock on hand should have been 39 units. But they told us that our stock on hand was 19. So we got to take the 39 minus the actual figure equals 20 units that have gone missing. So essentially these are the bags that have been stolen. Okay. So the next two questions, 14.4 and 14.5, these are interpretation questions. So if we look at 10.14.4, the owner is undecided about the markup and whether he should increase or decrease or leave it unchanged. Comment quoting evidence from the question. Okay, so like I said before, that 26.2% that we calculated earlier is very low. He should definitely aim for a higher markup, and he should increase his markup so that he can make up for all the units stolen, because you have to make up the profit somehow. Our costs are still incurred, we still have to pay off our costs, so we might as well increase the profit, well, to make up for the 20 units stolen. Okay, for 10.14.5, the owner is considering changing to the perpetual stock system. Do you agree with her decision? Discuss by explaining one advantage and one disadvantage of the perpetual stock system in comparison to the periodic stock system. So first it's asking if you agree with her changing to the perpetual stock system, so you got to say whether you agree or disagree, and then you got to explain with using one advantage and one disadvantage. So this, you can either say yes or no. It's up to you whether and how you back it. But if one advantage could be, it's easy to calculate stock shortages when it comes to that, in using perpetual stock system. And one disadvantage would be, it could be difficult to calculate the cost of sales amount without a computer or a barcode system or something along those lines. So it is more expensive to initiate. But yeah, I hope this has helped you understand a bit better on how to identify and know where and what figures to use when calculating values. And yeah, stay tuned for the next exercise.